Are you ready to think big and act bold? Then you are in the right place. This is Innovative Entrepreneurs, a podcast that will bring you the stories, insights, and tips from some of the most successful and innovative entrepreneurs in the world. I am your host, Erica Bailey, and I am here to help you start, scale, and sustain your own entrepreneurial journey. Let's get started. And today I am blessed to have Miss Alex Mic-Podar here with me and her business partner, Julie. I'm going to give you a little information about Julie. Julie is an expert bookkeeper and accountant. Since the founding of Backyard Bookkeeper in 2008, she worked with over 500 different companies in a wide variety of industries, including construction, nonprofit, healthcare, consulting, real estate, online sales, legal entertainment, real estate, and obviously many more. Her latest interest is bookkeeping for businesses that involve cryptocurrency and digital assets like NFTs. Tell me what that means. Julie also does most of the actual number crunching for the business, and she would rather play on QuickBooks than on Facebook. She has a weakness for superhero movies and Rachmaninoff, did I say that right? Mm-hmm. Chocolate, and loves reading in her spare time. Welcome, Julie. Hi, Alex.
You did that great.
I know I did. Thank you. So today I'm actually wanting to talk with Alex about what's called Profit First. It's a book from Mike Michalowicz, but I think it has a lot of information that we all as business owners can really learn from. And so I haven't finished the whole book, to be honest with you, but that's why I have you here to help us understand the Profit First, how it works. So you want to introduce yourself or tell us what's your favorite superhero? What's your favorite superhero?
I don't have a favorite.
Oh, yeah?
I just
love superhero movies.
I like movies with enough fantasy that it's gets you out of your own headspace.
Yes.
And but it's also not something that will create anxiety in your actual real life.
Harry Potter.
Yes.
Yeah. I am a huge Harry Potter fanatic.
Yes.
Really crazy. So, all right, 500 different companies.
Mm-hmm.
You don't look like you're 500 years old.
No.
Well, our business, Backyard Bookkeeper, has had over 1,500 clients, and she probably touched every single one of them. But
yeah, we have clients coming and going all the time, okay. And in all kinds of industries. And I've had the opportunity to touch the bookkeeping in some capacity over those 16 years in business. So it's I've seen a lot, and it's gratifying when people come to us and say, "Oh, I have this really weird problem. You've probably never seen it before. Or my books are such a mess. I'm sorry. It's probably the worst you've ever seen." And I can say honestly, no, it's not the weirdest. No, it's not the worst. So
that is fantastic. So tell me, we were going to talk about partnerships. Now, you have been partners for 16 years.
Yep. Yes.
Is that right?
Yep.
Okay. So first off, before we talk money, I want to understand how that works. Can you share?
Yeah. So I was fresh out of college, and I had a couple of part-time jobs in office management, basically. And that included doing quite a bit of the bookkeeping. And it was getting more and more interesting. And I would talk about it, and we were roommates at the time. And Alex, she's got the more business mind,
Yeah, I've learned
that.
Well,
if you enjoy it so much, I'll make some money off of you. So
that sounds about right.
That's where the business started.
Yeah, so. I coach businesses, and I coach partnerships in particular. And it's funny because at the very beginning, they're so excited about their business, and you can see their passion. But then the secret little thing comes in when cash just starts floating in. And that's when usually partnerships start struggling because it's all about the money. And so a lot of partnerships that I've observed is the number one thing that they do wrong is that there is no written agreement.
Okay.
Right.
Yes.
It also it's from the very beginning, it's two friends getting together or two acquaintances getting together. Let's do this business.
Okay.
Right. And they both have the same passion, but they do not decide who's in charge of what.
Oh.
And so they both go for the same goal at the same space, but they start having friction because they feel like they're stepping on each other's toes. And so, like, if you can decide from the very beginning, okay, you're in charge of this and I'm in charge of this. So in our case, right, I grow the business. My job is to go out there, make the partnerships, bring in the clients. I don't do the sales. She does the sales because she's so much better at talking about the day-to-day of the things, right? So it's all good partnerships are all about deciding from the very beginning whose job is what. It doesn't mean that sometimes you don't do it together, but then it needs to be decided together. And the biggest problem that I see is that when it's not two friends or two people who know each other for a long time, they come into business with each other, is that they just take each other by their word without any witnesses. And then they don't put it in writing.
Yeah.
How much are you supposed to take home? If some extra money comes in because of me, am I allowed to take home more money? Like, this is just everything, especially if you're not the same household, if you're not, I don't know, life partners or whatever, make sure that it's in writing. But even if you do business with your family, make sure that you put it in writing, especially if you do it with your family.
Okay.
You know,
The other thing that I'd add to that is it's important to choose a business partner with complementary skill sets.
Yes.
Right.
Okay.
You know, and in our relationship, I'm the technician, you know, to borrow a term from Michael Gerber. The actual work of the business, that's my specialty.
Okay.
But without Alex's vision, it would never grow, right?
Yeah.
Without her vision, without her thinking 5 steps ahead all the time, without her developing strategic partnerships. Yeah, I mean, she's brilliant at that stuff. You know, I'm the classic introvert. I'm good in my little cubicle. Like, just sit me in front of the computer, let me sit down and get my work done. And Alex is out there just building relationships and turning it into something that is bigger than just what I and a few other people can do sitting in front of a computer screen.
She is pretty
cool.
Pretty cool.
Yes.
So you're the analytical one, the money one, the one that likes to sit in the computer and get the work
I
done.
love spreadsheets. Alex hates them.
Really?
I mean, that's kind of a classic example. Like,
okay.
I want a table of data with rows and columns neatly organized. I can look at it and, you know, discuss it. Alex hates that kind of stuff. She's like, no, like, distill it down to like a couple of important points. I want color coding. I want someone to talk to me about it, you know? So
yeah, that sounds about right.
I don't have the time.
Okay. So let's talk about this money. It is tax day, right?
Yes,
it is tax day. So
Yay.
I would like to know, and obviously you can't share the total information, but what's the strangest thing you have seen?
strange.
Or unique or...
Well, we often see the interesting expenses on the clients that they're like, this is marketing or research. And they're like, sure it is.
I think the best story, and this actually isn't mine specifically, but one of our bookkeepers, this was years ago, she'd gone down to someone's office for a kind of an in-person visit to discuss what they needed and what needed to happen.
Okay.
And it was product development. And that's what they did, product design. And she's in their office and the business owner was saying to her, you know, sometimes we buy really strange things. And hey, you know, they're walking around the warehouse. They've got their computers, their, I don't know, printers, whatever other equipment.
Please tell me there's
everything.
no like swings on the ceilings.
No, but it was, she turns to him and she says, it's not like you're like buying diapers or something.
Were they pink
with a
diapers?
company card.
Oh.
And he goes, actually, and he opens the next door and they've got stacks of all these different brands of diapers.
Are you serious?
Because they were currently in the process of designing a diaper pail
packaging
for
or something.
something.
Oh.
Yeah.
But she called it. She literally called
absolutely.
it.
And it was just pretty funny.
That is hilarious.
I don't know, some funny things we've seen. There are all sorts of like little odd things here and there. None of them feel all that strange. Like I think to the business owner who is doing it at the time, maybe it feels really weird and out of the ordinary, but we've seen so many of those now. One of the fun rides we were on, this was like a decade ago. No, more than that. Do you remember the HCG diet craze?
Yes.
When was that? That was more like 2010, maybe.
Yeah,
like 14
like
years
that.
ago.
Yep, I actually did it.
And we picked up a client just as they were getting started. They snagged one of the good domain names, which ended up being one of the deciding factors, is like who did really well. We signed them when they were making about $3,000 in sales every month. And we stuck with them until they broke $1 million in monthly sales, like online sales. But their big problem was that they kept getting dumped by their merchant processor because it was considered a risky product, and so they would end up with, I don't know, chargebacks and returns and whatever, and it would hit some kind of critical point, and the merchant processor would say, "Hey, whoa, this is too risky. We're not going to do it anymore," and they'd just get cut off with no notice. And so suddenly they'd have this website that they couldn't sell anything on, and it kept happening like every couple months.
Oh,
yeah,
that's horrible. So how do accountants take a company that's making $3,000 a month and turning it into $1 million?
Well, it wasn't the accountants doing it. They did
this.
Oh, okay. I'm like, hey, you can do
no,
that
I'm just
for
saying
me.
we grew them. We grew with them up to that
Okay,
point. And that was
okay.
kind of the threshold where they said, we really need someone in-house full time.
Oh, okay.
So
that makes sense. Yeah. So let's talk about profit first.
Okay.
So my understanding is it's basically a way to look at your clients or your business income and taking a percentage of the profit out first, and then you're breaking it up into like overhead and owner's comp and taxes. That's about as far as I because then he started talking about spreadsheets, and I'm like, I'm driving, I'm going to have to finish. I know there's something to it. So talk to me about that.
Well, as I understand it, I've read several of his books. It's been a little while, but his personal mission, how do you pronounce his last name?
Mike Michalowicz.
Michalowicz.
I believe so.
Michalowicz.
In my head, it's Michalowicz, but anyway,
cool.
Sorry, Mike, for butchering your last name. I totally know
I
how
do know
that works.
I'm pretty sure it's Polish.
Is it Polish?
Yeah.
There you go.
I don't know.
We're not sure, but either way, he's an awesome guy.
Polish, so I don't know. Anyway, but his personal mission is to eradicate entrepreneurial poverty. That's how I remember him phrasing it.
Entrepreneurial
it sounds
poverty.
Yeah, so there's all these people out there that are going out and starting businesses because they want to do something for themselves, because they want to grow a business, they want to make some money, put some aside for a rainy day, take care of their families, hopefully make it big. And so often that just turns into this constantly chasing after money and never quite feeling like you're making it, and honestly making you feel poorer than when you started, and there's so many people who out there who sink so
You're
much.
putting so much more time into that work.
Yeah,
if
you invest your personal funds into it, and then what? And we've seen that happen with several small business clients that we've worked with. They
happened to us.
They get a $100,000 loan from a family member, and 6 months later it's all gone, and they're not making enough money to cover their operating
loan.
Yeah.
Oh, gosh.
So we've all been there, and so Mike's mission is to let's give people the tools that they need to overcome that.
Okay.
Right?
Yes.
So profit first. The basic concept is, your business is making money. You as business owner should not be the last person to get paid. You should be the first person to get paid,
because you're putting more in.
Okay. Well, it makes sense.
Yeah. So the basic philosophy is, instead of earning a bunch of money, paying all of your expenses, and then seeing if there's anything left over for yourself. Instead, you allocate a certain portion for yourself.
Okay.
And then you decide which of your expenses you can pay. Or like you budget, like this is how much I can spend on other expenses.
Okay. So are you taking out the profit, or are you taking out the owner's compensation? Like, or is it all? Do you know?
I'm not necessarily the person to ask about like the actual mechanics of it. He talks about like having different buckets. There's bookkeepers will often complain about the profit first method because it means that you open several bank accounts and that there's constant bank transfers.
Okay. Okay.
So,
which is a pain. I understand. Yeah. Okay.
So our bookkeepers, when they get one of these clients, will complain all these extra transactions. And there are some weaknesses in that setup, in particular when you have someone who's using the S Corp model. Because then how do you, like, if you're having a saving account for taxes and you have a separate saving account for owner's compensation, how do you manage that? And if you're using a payroll solution like Gusto or QuickBooks Payroll, in general, they will only let you run payroll out of one bank account. Like you can't have your paychecks come out of one bank account and your tax payments come out of another.
Oh.
And so there's like logistical things that can make that a little bit tricky.
I thought Profit Solve basically a digital budgeting, like, you know how people do budgets by having different envelopes for different things in their household? That's exactly what he's talking about. You just have different bank accounts for everything.
Yeah.
To make sure that you don't touch it. My honest opinion about it is, and a lot of people want to do it, but what I've seen, the ones who want to do it are the solo entrepreneurs.
Okay.
I believe, and I'm not saying that it doesn't work, but I personally believe that once you start hiring people, it's not, number one, that's when you really become a business, because then your business is starting to have legs and arms by itself. It's not just you anymore, right?
Okay.
Then your time, in a way, you start becoming your employee's employee, because you grow the business to make sure that you can keep hiring, right? You're cloning yourself, right? I tend to say this and people don't like it, but I really believe that you're not really a business owner while you're just a solo entrepreneur, because it's easy to take care of yourself and it's easy to do Profit Solve. It's easy to do Profit First when you're just by yourself, because then you only have to think about paying yourself. Right?
Yeah, that
and then
makes
pay
sense.
all of your 1099 people or all of your other expenses. But once you hire people, I believe that the ethical thing is pay them first.
Yeah. Yeah.
You know, and this is where I believe that once you start hiring people, you have the responsibility, because you're suddenly not just responsible for your own self, but you're responsible for that employee and their family and their well-being, you know? So in good conscience, I would never be able to take money, even though it's my business. Your profit should come someday from the fact that your investment into that company, your time, or the money that you leave in it should come back to you once you sell that business.
Oh, well, that makes sense.
Right?
Yes.
Yeah.
So,
That makes sense.
but at the very beginning, absolutely, you should be compensated for your time and your effort.
My big problem with Profit First as a money management method, I think the philosophy is sound.
Yeah.
But you can't legally choose not to pay your employees.
Yes.
No, of
If
course
you don't
not.
have money to cover payroll. If you kind of set up this system, you pay yourself first, and then all of your recurring software charges start failing because you've run out of money in the account, right?
Right.
And so one by one, Zoom gets canceled, Microsoft gets canceled,
Your business
your
gets shut down.
domain gets canceled, and suddenly you don't have email anymore. You can't actually run your business, right?
Right.
Like, so you can't necessarily make those choices,
This
right?
Okay. Yeah.
So
if you have so many softwares and stuff like that, you should be having money to pay for those, regardless of how much you're taking out, right? So,
Wait, you're not supposed to use credit cards to just pay everything and forget to pay those off?
Isn't it the story of a lot of entrepreneurs?
Right.
Yes.
Yeah.
But I believe that here's the thing. What I believe that money is useless if it just sits in your pocket.
Mhm.
Every single penny that you're putting in your business should at least make you twice the money or more.
Okay.
If it doesn't, then you're really doing something wrong.
Okay.
You know,
Yeah.
every penny should be an investment. Every employee, every software, every equipment that you're bringing into your business needs to be something that makes your business bigger and better. Not, I'm just buying all these chairs and all these microphones just to show that I have a business. You know,
Okay.
every microphone right here should make money for Robin Hood Studios.
Yeah.
If it doesn't, then it's a waste of equipment.
Got it. Got it. Well, that makes sense.
Yeah. My takeaway from the profit first method is that the owner of a business needs to pace themselves.
Oh,
Um,
now I'm interested.
So one common struggle is that your income is uneven,
Okay. Yeah.
right?
Yes.
And so, you know, 1 month, maybe you make $30,000 and next month you make 3, right?
Yeah.
Or maybe are supposed to have regular income, but you have people who have a hard time paying. And so like anyway.
Yeah. It puts you in
So
it's
uneven,
yeah.
right?
Yeah.
And so you need to do a couple things. You need to somehow to build up a cash reserve as an owner, right? So maybe every time you get a deposit, you just take a certain percentage and you sock it away in a money market savings account.
Oh,
You know,
okay.
just like build it up there, right?
Okay. But pace yourself. Right?
Yeah.
Okay. Got it.
Not 30%, but like some percentage that you can manage, right?
Okay.
And then don't take all of the money out for yourself all at once. You know, think about, okay, what's sustainable? If I don't get any money next month, you know, I need to leave some in there so that I can also take a paycheck next month, you know?
Yeah.
So like just because you got 30,000 in a particular month, don't pay yourself 25, you know.
Yeah. Okay.
What's actually reasonable? And try to think of the business as separate. And whether you're an S Corp and taking an actual paycheck or whether you're taking draws, doesn't matter. Try to design it in such a way so that it feels sustainable and you can still take the same amount of money every month.
That makes sense.
That's a reasonable salary, right? At the same time, you also need to plan ahead for taxes. So depending on whether you're an S Corp and you're taking a paycheck and you've got some tax withholding from there, or you're making estimated tax payments personally, whatever that tax liability is going to be for you personally, plan ahead for it. And again, put some money aside. So maybe you add to the amount going into savings, or maybe you add a different bank account and you make sure that you're putting some money away every month towards taxes.
Okay.
It's sometimes I find it funny that you have to explain to somebody. I think there are two kinds of business owners. The kind of business owner, and this is coming straight out of the IMIT, which is my favorite. I call it the business Bible. If you haven't read it, Erica, you must read it.
What is it called?
The IMIT, Why Most Businesses Fail Within 5 Years. It's
By
Michael
Michael
Gerber.
The E-Myth.
It's my business Bible.
Business Bible. I'm writing this one down.
Yeah. So there are two kinds. I think one business owner is the kind that wants to build a business for the future and wants it to be from the very beginning its own entity.
Okay.
And then there is the other kind of business owner who just goes into business because either they're tired of what they've been doing and they think that they can do that for themselves.
Okay.
Because they're really good at it, or they just simply think that they can do it better than their existing boss. So they go out and they start their own business. And there are family businesses, or what are they called, Julie?
Lifestyle businesses.
Lifestyle
Is that what you're thinking of?
businesses. You know, there are lifestyle businesses and there are actual businesses, right? If you want to start an actual business that will outlive you, this is when you're starting to think about, okay, I'm really good at this one thing. How can I? And nobody is going to be as good as your business at the very beginning than you are, right? You are your best salesperson. You are your best technician. You are your best everything, right? So you have to think about, how can I clone myself in the first person that I hire, right?
Oh, okay.
But once you you hire that one person needs to be an investment into your company. And once you do that, you do not have the options of not paying taxes. The IRS might not come after you for not paying taxes for 4 or 5 years.
For your income tax.
For your income
Mhm.
taxes. But man, you miss one employment tax payment, they're knocking on your door because it's not your money.
You cannot mess up
Yeah.
your payroll taxes.
This year,
Don't do it.
This year and the next couple of years, there is going to be, I foresee a lot of hand slapping, simply because a lot of people have 1099 employees. There is no such thing as a 1099 employee, and you should be very, very careful.
Okay. So,
Either they're contractors or employees.
Yes.
okay.
There is no
okay.
1099
So,
employee. That term doesn't exist.
okay. That makes sense.
It exists, but it shouldn't.
Okay. So, what is the difference between an owner draw
Mhm.
and a paycheck when you have an S corp? Can I?
Okay. You want S corp theory?
Yes, I do. I do.
Okay.
Start with the simple fact. So, like, people who are listening,
Mm-hmm.
they might not know why they should even be an S corp. So start from the very beginning, please.
Okay.
Because she can
So-
go right into it. But start at the very beginning, like as Michael Scott would say, explain it to me like an 8-year-old selling lemonade. So
Okay.
please.
Does she always tell you what to do like this?
Absolutely.
I love it. Okay. Start from the beginning.
Okay. So the S corp thing, it's a tax savings tool, basically. Okay. We say S corp. There is no such thing as an S corp. I don't know what's the correct terminology. Like, it's not a separate kind of entity. What it is it's either an LLC or a corporation who has filed a form with the IRS to be treated as a subchapter S corporation or something. So you opt in to a particular kind of tax treatment.
Okay.
And both LLCs and regular corporations can do this. And it doesn't matter if there's one owner or multiple owners of the business. Okay. And the easy way to explain it, and I'm going to really dumb down the math to make it super,
Thank you.
to make it really, really
I'm a
simple. So
marketer. I don't play math. That's why
So,
I have ladies like you.
let's suppose you are a small business owner and
But you see, this is why a good partnership comes along, because she knows it. I just put her in front.
okay. So you're a small business owner. You made a bunch of money, several $100,000.
Oh, yeah.
In a particular year.
Okay.
You also had several $100,000 worth of expenses, and your net at the end of the year is $100,000. Okay, as an LLC. So the LLC is what's considered a pass-through entity, which means that the IRS doesn't tax the LLC; it taxes the owners of the LLC. Okay. So $100,000 of net profit is flowing through to your personal return as earned income.
Oh.
So that means you are paying income tax, and you are also paying what's called self-employment tax. So self-employment tax it's basically your contributions into Social Security and Medicare.
Okay. Yep.
And it's 15%.
Oh.
So,
Okay.
I don't actually do income tax, so I don't know what the nominal
That's okay.
tax rates are, but suppose you're in the 20% tax bracket, and so you're paying 20% income tax plus 15%. That means you're now going to owe taxes of $35,000. Right?
Why would any? Okay.
So, you say, well, that's a lot of taxes,
Yeah.
and I shouldn't be penalized because my business was successful.
Yes. Oh, wait a minute. We're talking about the IRS.
Yeah. And so we're going to say, okay, rather than treating you like just an independent contractor who got a 1099 for $100,000, let's treat this like a corporation. Let's say, okay, this is a company, and you as owner of the company, you're going to be on payroll.
Okay.
You're going to pay yourself a reasonable wage. Let's say $50,000 is reasonable for whatever industry you're in.
Okay.
For a salary of someone doing what you do. So we're going to put you on salary. We're going to actually set up payroll, which means the full treatment. Like you're going to set up a payroll subscription, sign up for state withholding, state unemployment, all of those things. You're going to make the payments, but you're going to pay yourself a paycheck of $50,000. Okay. Now, instead of paying that self-employment tax, which is the Social Security, Medicare, instead that flows through payroll. And on a paycheck, those taxes get split between the employee and the employer.
Yes.
Okay, so they're still paid. Okay, but they're going to be paid through the company rather than on your personal tax return. And they're only going to be paid on your paycheck.
Oh,
okay.
Okay. I think I'm tracking here.
Okay, so payroll taxes going to come out of the paycheck. Well, your that self-employment tax that we were talking about, and the Social Security, Medicare, those are levied on your earned income.
Okay.
So independent so this is like your 1099s that you receive for whatever it is you're doing, any employee wages, those are the big ones. But then there's also passive income.
Okay.
Right? So like if you have rental income, investment income, things like this, right? You didn't earn that money. Well, I mean, kind of you did, but you didn't work for it.
Got it.
Right? So passive income is not subject to the FICA, to the Social Security and the Medicare, because it's not earned income. Okay? So what we've done is we've taken this $100,000 worth of profit and we've said, okay, this is now a company. We're putting you on payroll. So you're going to get your paycheck of $50,000. And so your self-employment tax, which we're going to call it payroll tax, but it's the same thing. Okay. Your payroll tax that you pay out of the company is going to be 15% of the 15,000.
Okay.
Okay. So instead of 15,000 for all of it, we're only going to pay 7,500.
Okay.
Okay. And then the rest of the profit is passive, right? So the company is paying you a paycheck, and the rest of it, the money still belongs to you, but it's now passive income rather than earned income. So you're basically what you're going to save. And again, I've really simplified and dumbed down the math here. It doesn't quite work out the way I'm talking, but the approximation gives you the point. That remaining 50,000 of passive income is not subject to the self-employment tax. So you save 15% on whatever the difference is between your paycheck and your passive income. A common challenge is choosing the right paycheck, right? Because, okay, I'm a lawyer. I'm making $300,000 net profit a year. I want to save on taxes. I'm going to put myself on minimum wage.
Okay.
So you issue yourself a paycheck of $15,000 for the year.
Okay.
And then you've got over $200,000 of passive income that, that saves you a lot of money. Guess what? You will be audited. And they will come back to you and they will say minimum wage is not reasonable for a lawyer.
Okay.
And they will decide what your reasonable wage should be, and they will charge you the extra taxes and you will get in trouble.
Okay. Well, don't pay yourself
do that.
minimum. Yeah. If
So
you're a lawyer.
It needs to be reasonable for what you're doing.
Okay. Well, that makes sense. So with an S Corp though, like I have an S Corp.
Right.
So how does it work between like an LLC and a corporation? Like, is there a difference?
No, it's an S Corp is an LLC. You just elect to be
or a C Corp choosing to be treated as an S Corp.
Or a C Corp, yeah.
Either one works. So as an S Corp owner, you can take a paycheck or you can take an owner's draw.
Okay. That's what I was
And
wondering.
that's allowed.
Oh, okay.
Okay. Trying to think what red flags there are. If you take more in draws than you take in a paycheck, that can be a red flag.
Okay.
Like there's no hard and fast rule.
Okay.
Right. And CPAs will have different guidelines, but if you're taking more in draws than you are in a paycheck, then you're probably cheating the system a little bit,
Okay. That's good to know, actually.
We're not tax preparers.
No.
We do not do income tax. We do not business taxes. But if you'd like me to bring you a CPA that you can really get some information out of about taxes,
yes,
I will arrange it for you.
Let's do it.
Yeah.
So you're literally looking at things like each month, right? And kind of putting them all into their individual buckets.
Yes.
Right. So what do you look for? And you're like, hey, wait a minute, you gotta do something different here. I mean, is that what you do as bookkeepers, is take a look at kind of what's happening each month and say you might want to adjust based off of XYZ?
It depends on our client. It depends on the clients if they even have a need for that. Like we have some clients who recently they're like, I don't even care about you reconciling my bank account. And I'm like, okay, let's talk about why you don't care about reconciling your bank account. But it really depends. Yes, all of our bookkeepers are trained, and we train them to look at the numbers. And sometimes if the relationship is that way, we make some suggestions like, really, you want to buy a new car? You should maybe spend that money that you have in the bank on this instead of a new car. Do you really need a new car? Or do you really need new office equipment? So yes, we do sometimes give advice, but that's client to client.
Got it.
Our main
Not
goal
everybody
is
likes to be told.
our main goal is to provide reports to business owners that they can use to make their decisions.
Yeah.
And so we've trained our bookkeepers to make sure that they know how to produce good financial statements, how to tell when something's wrong or when something's weird,
and customize reports if needed to. Like as the business grows, you need. Everybody's keep giving me a hard time about I don't like spreadsheets. It's not true. Numbers tell a story. And if you pay attention to I want spreadsheets that are very clear from the very beginning. If you give me like a spreadsheet with like 20 tabs, then I will just throw it out the window. Give me one spreadsheet with one tab and I know exactly what I'm looking at. But as your business grows, you want to pay attention to your numbers because they do tell a story. And I believe there is this 5-year cycle in every business, and you always come back to the same thing. If you actually look at your numbers, you always see like, okay, at each 5-year, I struggled with this, and you realize at 10-year, you struggle with the same thing. And then you go to 15 years and you realize you're struggling with the same thing that you struggled at 5 years. It's very, very interesting. And, there are certain points in a business where you go down and then you come up and there is a pivot point. And I think that pivot point always comes at 5 years. It's very, very interesting to see. Or it comes to a certain income level.
Okay.
So it comes at your first $10,000 that you're making. And then it comes at your first $100,000 that you're making. And then it comes at your first $1 million that you're making.
Okay.
It's a big number. And then you go and you look and you're like, yes, I made $1 million. And then you look and you realize and you go to your bookkeeper and your bookkeeper is like, yes, but you spent $1,300,000. So this is why I always say like your number one should not even be your CFO, your CPA, should not even be your, it's a misconcept. It should be your bookkeeper.
Okay.
Yeah.
Because they're the ones who are producing the numbers.
Okay. So 14 years?
16
years you've been in business together.
We started in 2008.
And how many employees do you have now?
Right now, 35, 37.
35. Mm-hmm.
Yeah.
Wow.
We lost a couple to motherhood.
Oh, that's not a loss.
They're building the future of backyard bookkeeping.
There we go. So if there was any tips that you would give, say, new business owners as they're getting into, trying to start off, like what would you say?
I would say accountability is so important as you start working with others, whether you're talking about partnerships, whether you're talking about contractors, whether you're talking about employees. Make sure that the terms of whatever arrangement you're entering into are clear.
Okay.
And honestly, client relationships too, right?
Okay.
Like, make sure that the terms are clear, that the expectations are clear on both sides, and then have a way to follow up.
Okay.
And hold each other accountable. That's so important with employees. And we've learned that lesson multiple times the hard way.
Right? What would you add?
Make sure that you realize that if you start a business, you cannot grow a business in 8 hours a day. You will automatically start working 24 hours a day. And if you're only putting 8 hours a day into your business, then just be okay with the results.
And you've been working like, or sleeping like 2 hours a day recently,
like that.
right?
Yep,
She's like,
yep.
I'm tired.
Yeah, I often see business owners who are going from the corporate world and they're starting their own business and they start bragging about, oh, it's so much better and blah, blah, blah. And I go, yeah, it's better because you're a solo entrepreneur right now. And your time is the biggest investment into your business, right? But once you start hiring, the game changes.
So you actually are the one that taught me that there is a difference between a business owner and an entrepreneur, that a business owner owns a business, but an entrepreneur owns multiple businesses.
Yes.
Right?
And yes, an entrepreneur is somebody who gets into starting businesses to eventually sell them. The goal is from the very beginning to sell. And that's why when you find entrepreneurs, you most likely talk to somebody who has not just one business, but has 4, 5, 6 businesses, or they're investing, or they're not sticking around. The business owner wants to start it and then see it through.
Yeah, I would say like this was a big epiphany that I've had just within the past few years, is that it's important to think of your business as an asset. It is an income producing asset.
Okay.
If you want to grow beyond the point where you're just a lifestyle business supporting your own lifestyle, right? You have to think about it as an asset. Like, and so that, therefore, how do I add value? How do I increase the amount of revenue that this asset can produce?
Okay.
How do I make it independent from myself?
Okay.
Okay.
That makes sense.
What systems can I put in place so that it can become self-sustaining?
We ourselves made the mistake that from the very beginning, without realizing, we actually set up the business as a lifestyle business.
Okay.
It was supporting Julie's passion, and it was supporting my passion, and then it was supporting our travels, and it was supporting this and that and that. And then when we started really hiring, and what I mean by is we didn't just started hiring because the business was coming in and we needed to support it, right? We realized that, we need to change our mind. And then suddenly we started taking bigger and bigger risks where instead of hiring one person at the time, we started hiring 3 people at the time.
Got it.
And that's when we really became a business. And that's when we started learning that we need to keep our people accountable and keeping them to their promise. If they want 20 hours of work, they at least need to give us 18, not 20 hours and they give us 5.
Got it. So I asked this of everybody.
Okay.
Who would you say is the most innovative person that has brought you to where you are today?
Well, obviously sitting here, but.
Yeah, I mean, so I kind of have 2 answers to that.
That's fine.
Yeah. One is, it's actually a client who's been quite an inspiration to me. She just went through, about when she hit 40-ish, went through a total transformation. One business wasn't doing so great. She ended up selling it or shutting it down or something. Complete pivot. And she just completely changed her life. And she did some random things too, like totally changed careers and started a new business that grew overnight. She entered a bodybuilding competition and lost a bunch of weight, even though I thought she was in great shape to begin with, and won some medals. She just did a whole bunch of things that you looking at her 5 years before, you would never have expected someone at her age, at her position in life, to pull that off. It was just this shock to my system. If I really wanted to, I could become a ballerina. I'm not saying that's my
superhero ballerina.
I don't know. Anyway, but I could if I wanted.
Yes, absolutely.
It's not outside the realm of possibility. Of course, it would take a huge ton of effort, but I am capable of that kind of change, of that kind of pivot if I really want it.
Yes.
So it's a matter of commitment and effort, right?
Desire.
Yeah. And so kind of having that realization that it is possible to make that kind of change even in middle age, right? And in terms of who's gotten me to where I am, I have to give credit to Alex for that. She is the business absolutely would not exist. Or if it did exist, it would be me and a couple assistants just doing bookkeeping work.
She didn't say that about you.
Right?
So
I always give her credit. It would absolutely not exist without you.
Well, Well,
So-
thank you so much. We have Alex and Julie here with us today from Backyard Bookkeeper. Where can they find you?
Backyardbookkeeper.com.
Well,
And
that's easy.
bookkeeper has 2 Ks.
Yes.
Oh,
And 2 O's.
Keeper and 2 O's.
And it's-
And a B.
Bookkeeping.
And
It's the only words in the English language with three double letters.
Really?
Mhm.
Well, that's kind of cool. Well, thank
And
you, ladies.
And it's
Thanks for
spelled
having
in
us.
one word.
Yeah.
I often see people spelling bookkeeper.
Well, that would be like I have books and I keep them.
Yes.
Okay.
Yeah.
Well, again, thank you, ladies, for joining me. We are so grateful. We are here at Robin Hood Studios. You definitely have to check out this place. I've been here multiple times and I just love the people here, especially Genesis over there. So thank you, Cameron. Thank you, Genesis. Thank you for having me here. And ladies, you have been a pleasure as always.
As always,
As
Erica.
always.
Thank
It's
you.
really nice to meet you.
You too.
All right. We'll see you next.
Wow, what a great episode. I hope you had as much fun as I did. If you want more of this goodness, make sure you subscribe so that you get notifications for future podcasts. And if you found value from this, please share it with others. You can visit our website at cwgdigital.com. This is Erica Bailey. I am your host, and I will see you next time.